Hello, this is Vincent Halliburton reporting to you live with the Arizona New Times. Jeremy Powell, chairman of the Federal Reserve, hinted in his last speech that the Federal Reserve will be able to slow down on rate hikes. And obviously, markets reacted bullish. We see the S&P and the Dow and the NASDAQ up a few points. However, a lot of people think that the bull market is back on just because the rate hikes are slowing down. And I beg to differ. Let me tell you why. So, obviously, when the Federal Reserve raises interest rates, it acts as a vacuum to suck money out of the economy as it makes the cost of borrowing money more expensive. It also makes the debt that companies has been taken out for cheap way more expensive. So for example, let's say you borrow $50 million and your interest rate was 1%. Well, now with interest rates going up, you're paying 2, 3, 4% or whatever that interest rate is. What this does is it makes it so that you have to lay off more people and start to cut down on spending, which is the Federal Reserve's goal. They're trying to cool down the economy, okay? So here's my theory. The Federal Reserve also has to decrease their balance sheet. They have to offload these mortgage-backed securities, collateralized debt obligations off of their balance sheet. In April, at its peak, their balance sheet was $9 trillion. Now they're at $8.6 trillion. So they've offloaded around $400 billion, but they still have a ways to go. So the Federal Reserve does not want to send the economy into a depression. So they can't raise interest rates aggressively like they've been doing at 75 basis points a pop, while also offloading a lot of the assets on their balance sheet, because they realize a lot of companies in the economy hold those same assets on their balance sheet. So by them offloading them off their balance sheet, it's also making the company's treasuries decrease, which is going to make them have to fire people and do more cost constraining things. I'll update you as this story continues to play along, but in my opinion, we still have more red to go as we printed more money than we ever did in history in 2020 and 2021. And now the Federal Reserve is trying to vacuum that money out of the economy and get our inflation levels back down to 2 to 4%. This is Vincent Halliburton reporting to you live from Arizona New Times. I'll see you next time.